as well as FX regime coordination and improvement. Take a listen.
That you have this wide margin between the official rate and parallel rate, and people who want to do legitimate businesses, including manufacturers, importing inputs and equipment, can't find dollars to do their business. And that is impacting on capacity and therefore reducing the supply of goods as well as services. So you can find the root of almost all the problems we have as a country into this particular conversation around revenue and spending. And this is not a problem that God is going to solve for us because it's man-made, it's self-inflicted. And we have to take the right steps urgently to fix this problem before it becomes a bigger crisis like, what we saw recently in Sri Lanka.
And let's quickly tell you what you need. Let's quickly take a break, and when we come back from the break, I'll be running you through the markets from the Nigerian exchange to other markets across the world. And coming up shortly also, I'll be taking my guest, Dr. Andrew Nevin, who is a partner and the chief economist at PricewaterhouseCoopers. We'll be looking at the global risk, the global headwinds, and the implications of platforms. We'll be right back. on the board. Okay, I can see it. You can see it. Yes, we saw an 11 basis points for the markets yesterday. That's a week open. The all-share index still hovering around the 51,000 points level. The market was down on Monday. Deals ended at 4,314. Traded value at 2.5 billion naira. We saw shares such as MTN Nigeria, GTCO being influential on the NGX on Monday. Now let's move over to other stock markets that we track for you. We're looking at the South African market. We do know that major economies as well as developing economies around the world are suffering from inflation. The Reserve Bank of South Africa also raised rates, just like the Nigerian Central Bank raised rates last week. But we're seeing that the market's down in early trade today is 0.5%. The Nairobi Securities Exchange in Kenya just up by 25 basis points. Let's quickly move over to the U.S. market and see what's happening there. The tech-heavy NASDAQ stock futures this morning are down close to 0.5%, while the Dow Jones Industrial Average was up by more than 0.25%. Let's quickly move over to Europe and see if there's some kind of green arrows. Okay, we can see 3 red arrows in major markets that we track for you. That's the UK, Germany, France, and in Spain, apart from FTSE 100 in London, up by 0.5% earlier today. Let's quickly check out the Asian folks while we were sleeping. The Aussies traded up by more than 0.25%. The Chinese market was nearly 1% up, while the Japanese market was down 16 basis points. What else? Commodities. Good. Okay. Brent is doing $106, but with higher oil prices, Nigeria is seemingly not getting gains from higher oil prices because of the lower output of oil that we've been getting. Oil production has been low, so we are not really getting gains from this $106 as well as the subsidy payment, which the finance minister has said will top about 6.7 trillion naira for 2023. This year, the president has gotten the approval of fuel subsidy payment of over 4 trillion naira. Anyway, that's a story for another day. So you can see that all commodities, at least most commodities that we track for you today, are in the green, at least as of earlier this morning, because we have a vast array of commodities being traded, from silver to platinum to, corn. Different things are being traded in international marketplace, but at least these are the major ones that we'll track for you. All right, let's quickly take a break, and when we return, my guest will be joining me here in the studio, Dr. Andrew Nevin, who is a partner and chief economist at PricewaterhouseCoopers. We will be looking at the global headwinds and the Nigerian economy. Have we been seeing the authorities respond? What have been their responses so far, if they've indeed responded? And what are the implications for the Nigerian economy the way it is? We will be taking that after the break. Don't forget to join us on all our social media platforms, on Twitter, on Facebook, on Instagram, and definitely on YouTube, Moneyline with Nancy TV. Let's take this break. We'll be right back. All right, welcome back to the program. Just as you saw there, my guest is Dr. Andrew Nevin, who is the partner and chief economist at PricewaterhouseCoopers. Dr. Nevin, good to see you and welcome to the program.
It's great to be here in the studio. It's been a long time, I think, since I've been in the studio.
It's been such a long time. We've been doing virtual. We've been doing virtual for quite a while. But it's good to have you here in the studio. We're talking about the global headwinds and the Nigerian economy, but I want to start by asking you, why is this headwind different?
Well, I think a number of forces have come all together at the same time, and they've been building up for a long time. So one thing that happened when we had the great financial crisis in 2008, and after that we had effectively a financial repression, quantitative easing, ultra-low interest rates, and we had that going for more than a decade, and really the policy was not sustainable, it was building up pressure. In the middle of all that, a few years ago we had COVID, which highlighted some other problems with the global economy. So what it really showed was people had spent decades refining their supply chains, making them more and more efficient. But when they made them more efficient, more countries involved, more movements of goods, all that ended up happening was you made them also more brittle. So when there was something that happened like COVID, it underscored how brittle these supply chains are. A third thing that's happened is during this last decade, we've really started to see the impact of demographics. So some people in the world are concerned that the world has got too many people. In fact, that's not what's going on. Outside of Africa, the number of children is declining. The number of adults of working age is declining. This year, for the first time, the total population of China declined. So that demographic impact of declining numbers of people, Japan, Russia, Spain, France, Poland, many countries, is really starting to bite. And then now we've overlaid it with a fourth thing, which of course is the Russian invasion of the Ukraine. And what that is accelerating is something that started a little bit with COVID, which is this deglobalization. But now you have, rather than Russia becoming closer to Europe and the United States, they're not going to be, we have a 30-year period where Russia is going to be probably locked out of the international system. And then we've had the conflict with China, which again is creating headwinds because it creates stress in the economic structure that we had and the trade in goods and services. So when you take these sort of 4 or 5 factors together, it's not a big surprise that we're really in a difficult spot in the world right now.
So how do you think, from your own lens as an economist and a chief, a dad, how do you think that Nigeria has been navigating through these headwinds?
Well, I think one of the things about the Nigerian economy is, I really appreciate the Nigerian Bureau of Statistics, but I don't think they necessarily reflect what's actually going on. We have many challenges on there, but there's more economic activity than the official statistics state, is our view. And I think, Nigerians are resilient. The reality is, if you think of the core things you need to run your life, so education, healthcare, power, security, particularly your previous, not your guest, but the guest on AIT, the last segment was discussing that. They're not supplied by the public sector. They're supplied privately. So 85% of children in Lagos, for example, go to a private school. So there isn't an expectation that the public sector is going to supply. It's about this incredible resilience in the Nigerian population. And of course, that when we have such headwinds, that resilience comes to the fore. During the COVID period, for example, Nigeria actually did relatively well economically. I think the economy shrunk officially 8% in South Africa. It shrunk about 1.9% here officially, and then rebounded quite, very quickly in 2021.
Now, you just said something which caught me, that the Nigerian people, the resilience, Nigerians are, we are resilient people. Do you think that we've been able to monetize and capitalize that resilience?
Well, yesterday I was at Diaspora Day, so I don't know if all the viewers know that July 25th, His Excellency President Buhari last year, I think 2020, designated July 25th as Diaspora Day. Last year in 2021,
yes, Diaspora Day,
Diaspora Day was virtual. Yesterday, 2022, Diaspora Day was physical. It was an incredible event. So if you're asking Nigerians monetize their resilience, the diaspora has shown it. And of course, the net foreign exchange benefit of the diaspora is bigger than oil. Oil may look bigger as an export, but when actually you take out all the U.S. dollar costs and what goes to the IOC and what goes to the expats that earn dollars that never enter the country, the net foreign exchange benefit of the diaspora is bigger than than oil. So our brains are our largest export. So that's a group through whatever resilience have shown that they can create economic opportunity at the highest level. I mean, I think that many people are aware, but it's incredibly important, that the Nigerian American diaspora earns on average more than the average American, which is an amazing achievement for such a young diaspora. But what's interesting now is the world has changed. It has been changing, but COVID accelerated the ability to do things remotely. So you and I mean, I said, I'm very happy to be in the studio today, but over the last number of months, of course, we've had many virtual sessions. We've figured out that there's more and more productive work that can be done remotely. So one of the things we're starting to see is more Nigerians selling, the brain power of Nigerians, the resilience of Nigerians, they're selling their services for foreign exchange, but they're not leaving Nigeria. And that's something that we would like to encourage. It's happening at an individual level. Companies are also organizing it. And at the end of the day, PwC's position is pretty simple. The most important export for Nigeria is Nigerian brains. We've shown it through the diaspora. But now we can show it over the next decade by exporting brains with people not leaving Nigeria. And put a number on it. We're about to put out a major paper on it, but I think we're going to suggest that we should be looking for about 2 million people over the next decade to remain in Nigeria, but do remote work for foreign exchange. And that is the best way, in our view, to solve the balance of payments problems, to stabilize the Naira, to have the money to import the things that we need to import.
I think I'll get that a little further. But let me still take you up on what you've said, which you've talked about. Nigeria's brain power is an asset. But with what we're even seeing from the diaspora and all of that, we are not seeing a resemblance on it macroeconomically. Apart from perhaps, the remittances that come in. And sometimes the central bank will say, oh, we're not even seeing this quantum of FX that the diasporans are bringing. So how do we see this asset or this, this quantity of whatever has been brought into the country reflect macroeconomically?
Well, I think we are seeing it. So, for example, I mean, there are statistics on every state and what percentage of the people in the state benefit from diaspora remittances. My understanding is Edo is the leading state, and I may be corrected, but the number that I've seen, I think it's a World Bank number, is 10% of Edo residents are affected by diaspora remittances, which is incredible. And I was at this event yesterday. It included many members of the diaspora. They are coming back to Nigeria, not just sending their diaspora remittances, but they're coming back to invest in Nigeria, either invest in businesses or invest in real estate, or in some cases they're setting up services, voluntary services, particularly around healthcare. I mean, there's a very large diaspora in the medical community, particularly in the United States. They're coming back. In some places they've started to build hospitals, for example. But what was really powerful yesterday was that this diaspora initiatives are often happening at the state level. So, of course, we have NIDCOM, Nigerians in Diaspora Commission, headed by the amazing chairwoman, Dr. Ebiki Dabiri. And she was the host for yesterday's event. But what we're seeing now is every state is setting up a Diaspora Commission because they recognize that's such an incredible asset for them to be able to tap into, both for the remittances but also for the investment and for the skills transfer. So Abia was the first to set up a commission for the diaspora, but every state is happening. I met Lagos is on the same track. Ekiti is a long way down. Edo has done it, for example. I think Kaduna has done it. So I think the diaspora is having this impact. I guess the question to ask would be, it's extraordinary that oil is at $106, as you announced. Mm-hmm. And if when I came to this country 12, 13 years ago now, if your oil was $100, we're sitting here and we're having this conversation, oil at $106 for quite a while, it touched $130, and there's no economic benefit to the country, partially because the production has collapsed because of the onshore the vandalism and theft, and partially because, of course, with the foil subsidy, the way it's structured, I think the number you just quoted is over 6 trillion naira. Yes. So oil goes up, the country doesn't benefit on that. So what's filling in the gap? In many cases, what's filling in the gap is the diaspora remittances. And of course, this started to go up very fast because what's happening is not only do you get larger and larger immigration, it's the 4th largest destination. Canada takes 360,000 immigrants a year, and Nigeria is the 4th largest contributor to that. But what's happening is people that emigrated 10, 20 years ago are starting to get very senior and earning more, so they're remitting more. So diaspora remittances are actually going up very fast. And again, I think the official statistics don't capture it because, of course, there's a lot of informal remittances through the bookie system.
through their bookie system. That's the street market. Now, let me talk about this diaspora thing further. If we're talking about the diaspora funds coming into the country, we do know that the whole world experienced the pandemic, a lockdown, and all of that. Did we see? I know that we saw at least a bit of squeeze of income, though we saw a lot of helicopter money coming in from countries like the US, the UK, advanced economies, including Nigeria, had, interventions for their citizens and all of that. How do you think that also contributed in a way? Because those monies that were given to citizens of major countries have now been said, okay, you guys go give us our monies back, inflation is high, we've got to tighten up interest rates and all of that.
Well, I think so. Just on the official numbers, so in 2019, I think the number was about $25 billion in official remittances to Nigeria. I think it dropped about to the official numbers to about $19 billion in 2020 during the pandemic, and then it increased back over $20 billion last year in 2021. So there was rebounded. But again, it's hard to know the official statistics because what also happened was the rate between the gap between the official rate and the parallel rate widened. So when that happens, more people want to go through the informal channels. So maybe the remittances held up. But of course, many of the people who are the Nigerian diaspora, they're very high-paying jobs. They're in jobs that could work remotely. And those sorts of people actually did very well economically through the pandemic. So if you were a banker in London, for example, you no longer had to pay to take the train in, you no longer had to pay lunch, coffee, it all added up. In fact, people's expenses went down. So, and of course, they recognize that the people they're supporting back in Nigeria are having a struggle with the pandemic and the loss of income here. So I think that in a sense the diaspora kind of stepped up on that. So the official statistics, yes, had a squeeze. I'm not sure the squeeze is as big as the official statistics on that. And I expect in the next year or two you're going to see in the official statistics we get back up to that $25 billion number.
Okay, Doctor, let's talk about, you've talked about the headwinds, but which of the headwinds really do you think is the largest one affecting Nigeria? Out of all what you have said, which one is giving us the heavy impact?
Well, I think that the oil price has taught us a lesson. I mean, because what we've learned is despite the fact we have a high oil price, it's not benefiting us. So I think people have really mentally moved off this model that high oil price translates to prosperity for Nigeria. Everyone has, in a sense, moved on. So I think that's probably a good thing. But the one individual impact of this high inflation that's really hurting Nigeria is the price of fertilizer and the impact it's having on the agricultural sector. So if you think of the agricultural inputs, what I'm hearing from my friends in that sector, farmers are continuing to buy the better seeds, the seeds that have higher yields, but they're cutting back on the fertilizer just because it's unaffordable. So in the agricultural sector, we really have a twin strain because there's problems because of the insecurity. People are planting less hectarage on it, or what effectively I'm told is what happens is that a farmer is deciding to just plant what they can plant within the confines of the village where it's a little more secure. They're not going out to the fields to plant the larger hectarage. And the next harvest cycle after this rainy season, I think we're really going to have pressure on that. And then that's combined in the agricultural sector with the impact on the fertilizer. So that's the particular headwind that really creates problems right now for Nigeria.
So how do you think those twin headwinds should be addressed in Nigeria? And let's first take it from the oil sector, where, of course, we're seeing higher oil prices now, but we're not getting benefits from it. Just a few days ago, NPC Limited was commercialized. A lot of people say, okay, fine, that's a good development, but a lot of people are also pessimistic that nothing really will change. Let's take it from the oil side before I come over to the agricultural side.
Well, I think with the oil, I mean, one of the things that's come out of this, if you actually talk about opportunities, and we've said right from the beginning of the invasion of the Ukraine by Russia, we said literally the day after on the media, it does create a huge opportunity for Nigeria because, we can see oil is dying. It's not just dying because of the problems we're having, it's dying because the world is decarbonizing. Now, as part of that decarbonization, the EU had said that natural gas was not a transition fuel. So they were not willing to invest in natural gas infrastructure. So then we had made the pivot. The federal government and the NPC a couple of years ago had said, look, we should be more of a gas country than an oil country. And that was a very good decision. But the problem was it was a bit late, because now all of a sudden you had major investors, the EU in particular, saying, well, we're not going to invest in gas infrastructure. So you had the ambition to grow the gas output, but not necessarily the investment that would come that we need from the outside, and also the expertise. Because if you think in this country, NLNG is a joint venture. It's 51% owned by NNPC, and then 49% owned by Total, Eni, and Shell. Right? So we need that foreign expertise to scale up. Of course, now the EU has reversed the situation. I mean, Russia is a completely unstable partner in the energy. We all, if we read the news, we all understand the difficulties Europe's going through, what's happening with the conflict in Ukraine. And now the EU has, I'm not sure if it's official, but they're clearly on the path to say that natural gas is important and it's a transition fuel in decarbonization, which is a huge opportunity for us. So we're only producing, I mean, we have over a number of years we could increase the capacity, but my understanding is what we're producing out of NLNG is about 67% of the total capacity of the physical infrastructure. Part of the problem in Nigeria is that most of the gas is what's called associated gas, which means gas that comes with oil. So when we stop producing the oil because of the theft or the vandalism, we also stop producing the gas. So the urgent task for Nigeria, for NNPC, NLNG, and the partners, is can we start to produce more pure gas, not what's called non-associated gas. So you're drilling the well for the gas itself, not for the oil, because right now people, particularly onshore, are not going to do it on oil. But that presents a real opportunity for us, because that is something. First off, that you don't have the same theft issue with natural gas that you do with oil.
But you have the gas flaring issue.
Well, gas flaring. I mean, there you're just taking money. I mean, gas is very valuable. You had the price up there, about $7 US for TCF, and you're just when you flare gas, you're just lighting money. You're lighting, $100 bills or $1,000 notes, a lot of them on that. So it's very important that we get stop the flaring too. But if we could produce more non-associated gas, so gas for gas sake, and of course we have the strategy here that gas is also important domestically in terms of particularly as a cooking energy for cooking. We don't want to be burning wood for cooking. That's just a disaster. So I think there's a confluence of interest where we could work with the EU to be able to grow our gas exports, simultaneously grow our domestic gas. And there was a conference, so the EU on July 1st had a major conference in Lagos, economic conference.
The Nigeria-EU Business Forum?
Exactly. And the major announcement there was the EU, and going back to agriculture, is committing 1.3 billion euros to agriculture. And I think the EU has actually done a very good job, particularly GIZ, the German Development Agency, working on the supply chains. There's a lot of things going on behind the scenes in agriculture to build up these added value processing. But on the gas side, we also discussed that issue around the gas. And I think that it's time from a strategic viewpoint for Nigeria to really engage Europe and how do we grow our gas exports while simultaneously helping to serve our domestic economy.
Just to add to that, I know that the DG European Union was here in Nigeria a few days ago talking about gas too, that the European Union is also looking to Nigeria as an alternative for gas, especially bearing in mind what is happening with Russia and the Nord Stream pipeline for gas and all of that. All right. I know you glossed over agriculture a bit, but what do you think, are they really quick wins? No, not quick wins. Are they really quick solutions that we can adopt so that agricultural output can be more? I know that the issue of security is still there, or insecurity is still there. Right now, you mentioned earlier the issue of fertilizer, and if you take a look at all of this, aggregately, it's impacting food prices in the market, which of course gets into the inflation basket and all of that. Are there solutions that we can adopt?
Well, I don't know if there's ever any quick wins given where we're at right now. What I would say is over the last 10 years, I mean, there has been such a focus on agriculture, and I know many companies, private sector companies, that are doing quite amazing things at really very detailed level, because every crop is different, every region of the country is different. So it's not like you need blanket policies. What you need is people working in detail with farmers to say we're going to improve the cocoa supply chain, or we're going to improve the cassava supply chain, or sesame, we can export sesame, or we can export ginger. And there are people working on all of those. And I think that the CBN sometimes is criticized for its intervention programs, but I think they've played a very positive role in highlighting the potential in agriculture on that. So it's there for the taking. We all know we can produce much more food. I mean, I think sometimes the policies may try to do things that aren't really what we need to do. So wheat, for example, I'm not sure we'll ever be self-sufficient in wheat just because of the nature of the climate, the nature of wheat. But you take cassava, cocoa, rice. I mean, there's been a lot of progress on rice, and a lot of individuals prepared to take prior investments in their home states. But if there was one thing that the government could do on that would really help, would be the road network. So if you think about the biggest bottleneck, I mean, we often talk about the agro-processing, and we talk about the cold chain, and those are complex issues to solve. But at a very basic level, if you don't have a road to take the produce from the farm to gate to the urban areas, it's not going to work. And the thing about farmers is, I mean, you said, Andrew, you're chief economist. The best economists in the world, the best economists in Nigeria, are farmers. They know exactly the risk, the rewards. They know things that can happen, and they know if they go into one crop and that crop fails, they're going to have a disaster. They know what grows in their area. So I think that you can rely on them to respond really well to these market signals. But as I said earlier, one thing that's really encouraging is to hear from my friends in the industry. The people are really, farmers are very interested in the seed varieties that can increase production here, that are robust in our climatic conditions and the variability that's coming with climate change on that. So that's very good to hear. So I'm actually in the medium term quite optimistic about agriculture, but I think that just given the insecurity and the fertilizer situation, the next 6 months are going to be very painful for the country.
So if it's going to be painful, that means that food prices will be higher.
Yes.
So your outlook for inflation, because that's actually where I'm going to, but let me pin it. Okay, let me talk about Nigerian inflation and the monetary policy response. What do you think?
Well, I think, if you think of when we were in a better place here, we were targeting about 7 to 9% inflation, and in a developing country, that's considered sort of about where you should be. So if you think of the United Kingdom or Japan's developed country, they're aiming for the band was 1 to 3% in the United Kingdom, right? You want to have basically stable prices going up slowly, right? In a developing economy, it's moving faster, higher growth. The normal thinking by classic economists was 7 to 9%. We're now at 18%, 19%. I think we are, and I don't want to be histrionic here, but we're tending into kind of an unstable area because, of course, what's happening is when you have that high inflation and you have the depreciation of the Naira, people react to that. They're particularly critical for people to protect their wealth. So you saw the explosion in the last few years of, for example, apps. For even people with relatively modest means could then convert their Naira at the parallel rate into U.S. dollars to be able to save or protect their assets in dollars. And of course, what happens when you do that is you decrease the demand for the Naira, so you put more pressure, so you're starting to create self-fulfilling prophecies. So now, if someone's faced with 18% inflation versus 7% inflation, their behaviors change on that. They don't want to save at 3 or 4 or 6% in that. They want to get their money into hard assets. You're seeing this particularly in real estate, I think, here. Of course, agriculture is also a hard asset. It's a real asset, not a monetary asset. So I'm really quite concerned about the 18% inflation and whether it's stable, right? Because, of course, if it continues to tick up, people's behaviors in terms of trying to in a sense, get rid of their Naira as quickly as possible are going to go even faster on that. And I think the central bank needs to really be thinking about this as an issue. I mean, we don't want to be in a situation where we tip over, and I think we're getting there. We tip over into dollarization. So people then started to refuse to take the Naira, right? So legally in Nigeria, 2 Nigerian entities cannot contract in dollars, right? They're legally required, my understanding is not lawyer, but working in the environment here is we're required to contract in Naira. And we haven't really been dollarized. We use Naira, and everyone uses Naira. At what level of inflation do people tip over and start to try to bend the rules to say, I know we're supposed to contract in dollars, but the reality is I can't take, that risk at 20%, 25, 30% inflation. So I am very concerned about that, and I think as difficult as the situation is, we do need to bring this inflation rate back down to hopefully single digits in the next 1 or 2 years. But of course, we're doing this all in a world where there's seen unprecedented inflation. I mean, it's extraordinary. I mean, I was there in Canada, a young person in Canada in 1981 and 82. I mean, interest rates rose to about 19%, which sounds not that high for here, but in our context was very high. Our family almost lost our house. Many families almost lost their house and that. But there was that squeeze came because we got inflation up to, I think, about 15%, 12 to 15% for a period. They just said that is not sustainable on that. So I think, but for us, as I said, the big danger is this kind of forced dollarization. And I think that the central bank has to, and the Monetary Policy Committee has to do some real thinking about how to make sure we don't go that route. If you go to Ghana, for example, I mean, Ghana is a very successful country, but it's much more dollarized than us. When they write the contracts, they may pay in CDs, but they pay at the prevailing rate, relative to a dollar peg. And we don't want to end up there, but we're inching closer and closer to that reality.
So do you think that perhaps even the interest rates hikes across the world, I was just looking at this morning, just trying to get an update of some interest rates globally, because I know that some global central banks will be having meetings this week into next week. The U.S., if we have that, we can actually put that. The U.S. interest rate is 1.75%, the UK 1.25%, the ECB raised rates to 0.5%, the highest in 11 years. I heard Christine Lagarde address last week. The Reserve Bank of Australia 1.35%, the Bank of Korea 2.25%, the South African Reserve Bank, which you mentioned earlier, 5.5%, the PBOC, that's the People's Bank of China, 3.75%, India 4.9%, Saudi Arabia 2.25%, Nigeria 14%. Some people have also criticized the monetary authority that, oh guys, you wouldn't have taken the 100 basis points uptick, you would have just allowed the 13% to perhaps permeate into the system. What do you think? And there's a next MPC meeting in September. What is your outlook for that MPC?
Well, I've tried over the years never to project exactly where the interest rates are going, because, I mean, our view at PwC is the issues that we have are not necessarily solved by the MPC. I mean, the MPC, from a technical viewpoint, is one of the finest organizations in the country, the way they do their technical analysis, the quality of their thinking, but they're not solving the structural problems. So to give you an analogy, it's a bit like they're the F1 driver. But if you give an F1 driver an F1 car from 1950s, they're only going to go as fast as the car in the 1950s. So we need the other people, the engineers and the government agencies
from fiscal,
not just fiscal, but structural policies on that.
The roads have got to be right, infrastructure.
Exactly. So, but to go back a little bit on this interest rate, I mean, at one level, let me use quite long language here, the world is in a fantasy land. I mean, I grew up, learning economics. There's one fundamental rule in economics, which is that you value things in the future less than today. So if that's true, then you need to have interest rates that are higher than inflation. It's just a consequence of it. So what does it mean? So the European Union, they've got 8-9% inflation now, and we're raising interest rates to zero. What does that actually mean? And so I said earlier in the show, we've never really addressed the issues from the great financial crisis. So you think what happened? I mean, banks did some terrible things. There were rules that allowed that incredible expansion of the balance sheets with very little equity. There was the housing issues in the United States. It all toppled over. So then the intervention came and said, well, we're going to basically create an infinite amount of money to keep interest rates low, infinite quantitative easing. And so we had these interest rates even below the modest inflation. So they were still below inflation when it was 0% or minus 0.05 in Europe. Inflation was 1 or 2%, so it was still below. So now we have a situation where inflation's gone to 8%, and we've got 800 basis point difference between inflation and the interest rates, and it still is imbalanced on that. So I'm not sure where the end game is going, but either everything we know about economics is wrong, either it's going to work out, or everything we know about economics is wrong on that, and we'll wait to see. But I mean, it can't. How do you tell a saver? So that you put your money away, you invest your money, you save your money to earn zero interest rate, while your inflation rate is
18%.
Exactly. So I'm concerned about that in the global issues. And of course, the one person who is being honest about this is actually the campaign manager for Liz Truss. People, of course, are aware who watch the UK news that Boris Johnson resigned, and now we're down to Rishi Sunak and Liz Truss. And Liz Truss has a policy where she's going to cut taxes. And then someone said, you know, interest rates will have to go up if you do that, right? And her campaign manager said that, absolutely, it's 7%. That's where they should be. People should be able to save their money and earn 7%. We might have 3-4% inflation, but you save at 7%, so you earn a positive return. But in Nigeria and virtually every other country in the world, savers are earning a negative return, and it creates unstable behavior that I don't think is sustainable.
Now, just 2 minutes before we go, I'd like you to talk about perhaps the public debt issues. The finance minister came out a few days ago to say cost of servicing debt is higher than Nigeria's revenue. The World Bank at the June, the Continuing Agency of Business Unusual, did say that our debt to GDP ratio is expected to get 36%. We're not looking at GDP now. We're looking at debt servicing to revenue, which we've been talking about for years now, which now has come to stare us in the face. And I would like you also to mention things around, are there risks around elections? You know, since our elections will be around, is just around the corner a few months' time. Are you all looking at that?
Well, I think on the first issue, we have said very clearly, 6 or 7 years I've stood up public and said we don't have a debt problem, we have a growth problem. And I said, but we need to grow, otherwise we will have a debt problem. I think sadly now we're coming to 2022 and we haven't grown, so I'm not sure I can say that anymore. I think we may now have a debt problem. When you take the government's under real fiscal pressure because of all of the issues we understand, including the decline in oil years, I saw the system work the way it should be, which is when the economy was growing 8-10%, people wanted, but they were happy to do it because their incomes were increasing. But in our situation where income per capita is stagnant or declining many years, very difficult for the government to come and extract, and particularly because on a social contract basis, people are going to rightly say, well, what are you giving to me? Are you giving me power? That hasn't happened. Are you giving me security? Are you giving me education? Are you giving me health care? So I think I've run out of road to be able to say it's a growth problem. We've now hit, I think it is now a fiscal problem, a debt problem, because we haven't had the growth that we should have had over the last 6 or 7 years. Okay,
in a few seconds, election? Are there any risks you're looking at?
Well, I mean, I think everyone who's been through a number of elections, as I have, know, first off, you don't have, political decision-making is stopped. You know, people are focused on the election. There's a flood of cash that has an impact, maybe helps the bottom of the pyramid a little bit and to some extent. And it's just a volatile situation. So I think just, I just urge everyone to stay safe over the next
couple of months.
Over the next few months as we get through the election as best we can.
Thank you very much, Dr. Nevin. I've been speaking with Dr. Andrew Nevin, who is a partner and chief economist at PricewaterhouseCoopers. We've been looking at the Nigerian economy and the global risk. You've just heard it from him. At least let's try and stay safe the next few months. Let's hang on there. That's the much we can take on today's edition of the program. You can still watch this episode again on our YouTube channel, Moneyline with Nancy TV. I'll see you all again tomorrow with another guest, another topic. Be the best you can be and be that change that you want to see. Bye now.